later, and he gives you an overview about the gender, and then let's start. And happy to talk to you. Thank you.
Hi, Alice. Thanks very much for the introduction. I hope you guys can hear me. Good afternoon, everyone. My name is, as already mentioned, Petr Szczucinski, or in English pronunciation, Skusinski. I'm based in Prague, Czech Republic, and I'll be guiding you through the first part of the webinar today. First of all, thanks for joining us. We have put together various topics regarding asset management issues the market has been facing in these uncertain times. So just to continue with the housekeeping, we've prepared an agenda. So we'll start with current market challenges, followed by actually what we can do, what we can offer in terms of the platform for asset management, then followed by the portfolio management part as such, with the idea generation, some kind of analytics. We'll run a few risk scenarios. We will go through the portfolio optimization and backtesting. And our esteemed colleague Ali will follow with the data integration and basically with the data as such, because at the end of the day, if you want to have a quality portfolio, you need data for your, first of all, investment decisions. But at the end of the day, you would need data to your post-trade systems as well. So we'll discuss that as well. At the end, we can open up a Q&A as already mentioned as well. Okay. So a little bit about our company, because some of you might know us already. It might be new to you. Basically, we're Refinitiv now, but where it all started, it started back in 1850s when Julius Reuter came up with an idea to transfer messages via pigeons. It was a first startup. It was many years back, and then it transformed into the cable, which was running under the ocean from the US to Britain. And as you all know, this term is still being widely used in the trading rooms all over the world. So now you can see when it actually originated. And there were many steps, such as the publication of first dealing service in 1981. And dealing is basically the world's, or we like to call it, the world's oldest social network. Because it wasn't anything else, that it was through a computer or through a computer system. It was connecting people who were dealing on it. So it was, probably Facebook can pay us some royalties for that because we actually came up with the idea. So just a quick skip this very quickly. So what happened in the past few years? We used to be known as Reuters till the year 2007, when Thomson Financial, a Canadian company called Reuters, and actually Thomson Reuters was established in 2007. In 2018, which is a year and a half ago, roughly, in October 2018. Consortium of private equity investors led by Blackstone invested in our division, which is called Financial and Risk, and bought 55% of that division. 45% still stays with Thomson Reuters. And we had to change the name because the Reuters news, the journalists, they stayed with the Thomson Reuters. And our esteemed marketing colleagues came up with a brand new name, which is Refinitiv. The first part, the first letters should, have some connection to the Reuters as such, and then some financial stuff and so on and so forth. But you can imagine how difficult it was to come up with a name which hasn't been used anywhere, doesn't have any bad connotations in any language, because we are a pure global company. We're represented on more than 180 countries in the world, and didn't have copyrights and so on and so forth. So basically, that's the new name. But I can understand that most of our clients, which have used us for many years, will keep calling us Reuters. Some of them Thomson Reuters, but we are now Refinitiv. To finish the story, there is actually a dotted line between Thomson Reuters and Refinitiv. We've come into an exclusive deal when Reuters News are actually, we have exclusive contract with Thomson Reuters for distribution of their content to financial markets. and it's a 30-year deal. So even though that they stayed in our parent company, in the Thomson Reuters, we still can distribute their content to you, our clients. What's going to happen very soon as well? We in talks. Basically, the regulators are looking into a takeover of Refinitiv by London Stock Exchange. And if everything goes well, even during this turbulent times, we shall become a part of the London Stock Exchange group in the second part of this year. So stay tuned. It will bring us more opportunities on the market. Good. A bit more introduction. We know small company. We've got 40,000 customers globally in 155 countries, but then our outreach is to the 180 countries, as I already said. And here you can see some statistics of what we can actually do in terms of the data. We, Refinitiv, are a data company. Our new logo and motto is "Data is just the beginning," and we're here to show you today how we can help you with the data to make well-informed decisions in your work. Last slide, introductory slide. Today we'll be talking about investment management mainly, and a little bit about market data as well. However, we are fairly active in some other fields as well, such as fighting financial crime. We can supply data and services for investment banking, trading, wealth management, you name it. So basically, it's much broader scope than we're going to be showing today. I was thinking hard about what to say about the current market challenges, because anytime I was started thinking about this topic, I came up with different point of view. Once it was volatility, it was unpredictability, it was regulation, politics, fake news, need for transparency, need for quality data. So it's very difficult to just state one obvious thing, or maybe 5 points, to say what are the current market challenges. But at the end of the day, the current market challenges for all of us, I believe, for Refinitiv and for our clients and for you guys, which I'm presenting you today, is basically be successful in your jobs. So we're here to help you to come over those obstacles, and let me show you how we can do it. I'm going to give floor to my colleague Elmar, who's based in Vienna, to talk briefly about the Refinitiv platform for asset management, and I'll be back with you shortly. Thank you.
Thanks, Peter, for the kind introduction. For those who clients in Austria, clients of ours in Austria or Balkans, they know me already in person. Hopefully, we'll see each other in the next few months in person again, when we hopefully have these stormy times behind us. If I switch to the next slides, I want to give you a short introduction about our platform. I think when we prepared for the presentation, we thought about who are our clients, and not everybody's a client of ours, and I think it makes sense even for our clients to introduce a bit more detail the framework we are providing to our clients. This is a very simplified scheme or drawing of what we can offer on the buy side for investment management companies. We have essentially two main product lines. The one with most of you are most familiar with is Icon. It's our desktop. Another one is Electron, which is our data feed. It's actually not only data feed, it's a whole platform for data. You can visualize this like an iceberg. Is that what you see in the desktop? And Electron is what's behind and what you may plug in to feed other systems. So if I draw a picture of a very simplified asset management workflow, starting with the analysis part, going over to the research part, going to the portfolio management and trading rebalancing part, actually everything is covered in Icon so far. When you see the licenses on top of each process flow. There you can see all the apps which we use, not all, but just a small fraction of those are the most important ones, apps we use on our platform. But if you look at the little bit more gray shaded ones, we have something called App Studio, where we can host third-party systems which work as apps on their own. And there's even more possibility for clients to integrate, in that we're integrating their own databases. You can see the openness of the system by all these arrows, the blue arrows, the APIs. We can connect the process. We can connect the different stacks of technology. We can import data, export in various ways. This is a very open system which can be integrated flexibly into your workflow. If we go to the lower part, we see a number of products, let's call it like that, which serve the issue of providing data to whatever system. So there is the Electron API, which feeds Icon, another desktop application. There is trading connectivity available as well. So as a portfolio manager, you might need tradable prices for doing your deals. There are data feeds for in-house systems, which we're going to have a closer look at. There's also data feeds for redistribution. If you think of redistributing data on your website, widget is another buzzword which is quite popular today. And there are these quant feeds which enable the quants to do their business, do their data management. If I switch to the next slide, which is pretty similar, you see the orange boxes. These are the areas we're going to concentrate on in this session. Peter is going to talk about idea generation, which is at the beginning of the process. He will then again hand over to me to the portfolio management part, where we all will talk about risk management, and he will talk about scenario analysis. And then Ali will talk about the thing which is here down there. It's the product name is Data Scope Select. It's the primary feed for our clients to consume data in their applications, in their in-house systems. So this is the scope of today's presentation. As Peter mentioned, we won't do a live demo, but we will have a number of screenshots where we hope to make it a bit more lively. Having this said, I'll hand over to Peter again, who's going to give you some ideas how to screen the market, how to generate ideas, and how to use the system in the analysis part. Over to you, Peter.
Thank you, Elmar. When I was preparing for this presentation, I was thinking, so how can we help our clients and our prospective clients and the actual markets to reach their goals? As I already mentioned that, and what we do. And I know I'm repeating myself, we're a data company, so we can provide you with the top of class data. And those data can come in different shapes and forms. Most of you probably know our desktop, which is called Icon. It's been on the market for quite a while. It's our flagship platform. But some of you, as Elmar, my colleague Elmar just mentioned, might be more interested in the raw data. It might be for the end of day reconciliation of your portfolio. It may be for your quants, maybe for distribution to your clients. So you can allow them to actually watch the performance of their portfolio in real time or end of day. That doesn't really matter how you want to play it. So basically, this is something we can deliver to you. But the main message I want to talk about today is where it all starts. It comes with the idea generation. So let me quickly go to the next slide. And what I've prepared is just a brief overview of what we think can help our clients. Just open your eyes and you've been doing this for many years and you've been successful. So we're not the ones to tell you how to do your job, but we're just here to present you. You may have not thought about this various angles. So let me just quickly go through that. One of the companies we like to work with is the company which is called Fathom Consulting. They take our data and they prepare these fabulous charts. And this one is on the market recovery after the COVID crisis. Is it going to be U-shape, V-shape, L-shape, or any other shape? Is there going to be a second wave? So basically, when you start with the idea generation, I guess you want to see what's the global markets are going to go. Are we going to be better off? Are we going to be worse off? So that's one of the ideas I can throw to you guys. Another one is, this is just the following, what's actually happening for the GDP growth all over the world. And these are the countries which have been in the first wave of the COVID-19 crisis. Is it gonna get better soon? Is it gonna get worse? So we can help you to give you the hard data, which we are presenting here, or we can give you forecast as well. The statistics which I really like is the City Mapper Mobility Index, which is showing nothing else than how much are people moving in their cities. So on this particular slide, you can see that since the start of the lockdown, obviously there has been some slowdown in people's activity and mobility comparing to normal in Stockholm. But even there, if they're the Swedish guys, they haven't closed anything down properly as most of the other countries have. They still stopped moving around the city. So even though the news outlets are saying, there's not much happening in Sweden in terms of the lockdown, the people are actually taking their own decisions, and that all can influence their spending habits. How much they move around, how much they spend on stuff, how much they invest. So basically, this is another idea I can throw to you. Or you can go more technical. You can have a look at, so what are the industries doing? On this particular slide, you can see that I've taken the trailing valuation. So are you interested in companies in this part sectors which are yielding the most, or are you interested in those which have the highest PE, or any other point of view you might have? Another one is you might want to have a look at those which have been most volatile. So what's the year-to-date price change, or what's the analyst revision model score, which basically I will talk about in a little bit. Or are you only going to invest in the largest companies when it comes to the market cap? Or as many clients have been asking in the real time in the past few months, and not months really, not 3 years yet, is the ESG. How are the companies doing ESG wise? Are they green? Are they pretend to be green? Do they pretend to be green? So we can provide you with all of these scores. As you can see, second to last column is the actual score or aggregated score per sector on global level when it comes to ESG. Other part might be of the idea generation might be, so what the analysts are thinking. It's not just the hard data we're seeing from the past, but what are the forecasts? What do they think what's going to happen? What are the changes in the future valuation, in the forward valuation? So again, we run these types of aggregations for our clients, or they can run it themselves, obviously, and based on that come up with any investment ideas, because we live in an ever changing world. Just quickly go through to the next slide. News is the king, data is the king. It's the saying I like to use, and when it comes to the news, we get the news from Reuters, and more than 1,000 other real-time news outlets. So basically, if you're looking for quality news, unbiased news, you are at the right place. We can talk about COVID-19 outbreak, or we can talk about other topics. Or you may want to look into what the healthcare industry is doing. So how they have been performing, comparing to, let's say, S&P, or are there any particular drugs they're working on? What's the stage of the drugs they actually are they testing? Are they live yet? So basically, this is the type of information we can offer you as well. And as you can see, at the moment, there are 264 drugs being in some stage of testing, either in discovery or actually launched, which means they are available on the market, which have something in common with the COVID-19 infection. So basically, what you can do with our systems, you can have a look which companies are where, what are the patents, what are the plans, what are the timelines, and based on these facts, again, you can do some informed decisions. But not to talk just about the raw data. We also run our in-house models. StarMine, I'm just showing on a screen, is a company we acquired a few years back, and they have been offering various models to the industry. You can have access to all of them in one container. That container is being Icon, our desktop platform, or even via data feeds, which Elmar will be talking about a bit later. There are some obvious ones, such as earnings quality, which you might know from the past, or we can discuss later, which are showing a degree to which past earnings are reliable and which degree to which they are likely to persist in the future. But I've decided to present you a slightly different model because that comes from StarMine as well. But let's say you guys have a portfolio constraints. All of the portfolios have some constraints. One of the constraints usually is rating. So I've decided to present you this particular company, which is Eli Lilly, which is based in the US, a big pharma company. I think they are top 7 or top 8 pharma company in the world when it comes to market cap. So let's say your portfolio constraint is, I don't know, A and above, maybe A- and above. So you have these guys in your portfolio. Obviously, anytime there is a change in their rating from S&Ps, I'm talking about the S&Ps constraint now, you may need to sell them, and you may not be the only one. And that would mean that the price is going down and so on and so forth. The same with the bonds. So what we are doing here to help you? We run our own in-house models, StarMine models. This is the credit rating model. And basically, what we do differently to the big rating houses. The big rating house, they come to the company, they look through everything. They look for everything. They do a thorough audit, and after that they issue rating. And then they do outlook, and so on and so forth. We do it differently. We don't have access to the companies themselves, but we have access to data, the vast amount of data. So be it the official data which we're getting from the company, which means the quarterly, the quarterly and annual results. We have transcripts of their calls. We reading what's actually happening in the analyst research, what's happening in the filings, news, what's the structure of assets, and so on and so forth. And we can run all of this in real time. So anytime there is any new parameter coming into this equation, we can in real time supply you with implied credit rating. In this particular case, you can see that our implied credit rating is in a bottom part of the screen. It's actually BBB+. So it might be likely that if everything doesn't go really well for this company, you may need to sell them because they might be downgraded sooner or later by S&P as well. It's not saying that there will be, but it's just giving you an extra piece of information that this might happen. And if you know, you can get ready for that. So this is basically one of the one of the models I wanted to present you. So once you've come up with all the investment ideas, obviously the easy part is screening. We've got a lot of models for that, a lot of applications. This particular one is basically the company screening. So let's say you've decided you want to invest in companies with a large market cap and healthcare. So we can help you come up with a decent list. Or you can do the same for fixed income. So as we said at the beginning, this is going to be a multi-asset portfolio. So it's either equity. We just decided to go for equity and fixed income only, but obviously you can do more. So when it comes to fixed income, again, you can do the similar screening. But for that, if we compare fixed income, there are some variables which are very specific to this asset class. As most of the fixed income instruments aren't traded via exchanges, it may actually prove quite difficult to find the right source of pricing and liquidity. So you don't really know if what's the actual quality? What is the price telling me? How old is the price? What's the price source? Is it coming from a broker? Is it coming from the exchange? Because still something can be coming from the exchange. And for that, on the fixed income markets, we came up with something we call TRPS, which is Thomson Reuters in-house analytics. And I have a colleague Ali who will tell you a little bit more about that. So over to you, Ali.
Thank you, Peter. Also, hello again from my side. And thank you for the nice introduction for the TRPS score. Yes, so if we have a look at the fixed income market, and I will also have some other part in later on as we talk about the data feed and the pricing services we offer to you. There is another factor you may have take into consideration. So as a factor or as an indicator, I would like to share some insights to you about the TRPS score. So basically, in a nutshell, the score is a measure of pricing transparency. So also from my side, a little bit, do not take us by our acronyms. We love abbreviations. So TRPS, lovely, but just the score. So the score is a measure of pricing transparency, and it's indicating the amount of incorporated market color for the evaluated price, actually. So it is a reflection of all available information associated with the instrument price. It offers you a scale from 1 to 10, and basically it's consisting of 4 components, which you can read on the slide, and where I'm going to share you some insights with it. So the transaction data as the first part of the score is referring to the trade activity, the number of trades involved with the instrument. The trade price size, which is distinguishing between the block size and smaller trades of the instrument. Then also trades on comparable issues. So for example, similar securities, like having the same issuer of the instrument, or being in the same industry, and the credit quality. So this is the one component. Another one is the amount and quality of broker quotes. So quite observable and very good input for pricing process. There we look at for example, quantity of broker quotes for each security, and also take into consideration bid-ask spread of broker quotes as well. Then the third part is the individual instrument attributes. So this component takes into consideration other market and reference data. For example, It includes core terms and conditions or prospectus data from an instrument. The bond type is relevant, being it a sovereign, an agency, corporate bond, a convertible or structured note. So also part of it is issue status. So the trading status of the instrument. Is it issued? When is it issued? Is it defaulted? And when to be called? Another part is the credit quality. So you see the individual instrument attributes is it covers quite a wide variety. Other attributes of this are, for example, also the amount outstanding, the face amount outstanding, the time to maturity, the original offering documents, and their availability. So, and this one, this third component, is kind of the starting point of the TRPS score itself. And the fourth, but not least part of it, our internal pricing data related to this instrument. So it's determined by our historical data that we have from our time series database, and it analyzes the frequency of evaluator updates for each instrument. So all these four components will be reflected in the score. So, for example, you see on this table the four input rows, kind of, attribute score, internal score, trade score, quote score, and then the final score. So all these four components are going to be reflected and experience a different weighting, which flows now into the final score. So, and the final score, of course, is the result of the formula where the majority weighting is contributed by the internal attributed score. So, and what is it? So if you have this scale 1 out of 10, it tells you that an instrument, for example, having a final score of 10, like US Treasury, where the trade score is 0, but it is an indicator of the activity around the market, around this instrument. So it's an insight into the fair value, but of course it's not a liquidity indicator. But fair point, it's just another puzzle or part of the puzzle of how to make screening and how to kind of define decisions and how to underlie decisions. So with that, I will hand over to my colleague. I think it's now Elmar again, and I will come to you back later with more insights about our data.
Thanks, but it's Peter.
Yes, it's me. Hi.
Sorry.
Just very quickly. No, it's fine. Just very quickly. Actually, just so that our listeners understand why there was a communication glitch. As most of you or all of you, we're still sitting in our humble homes, so it's not like that we're presenting from one office and we can just do a hand gesture one to each other. So it's basically we're learning this on the go as well. Very quickly about the portfolio management, actually portfolio analytics tools we have in our suite and our product suite. I guess you guys already have some kind of an in-house system or other type of portfolio management system which you use. But just wanted to quickly mention that we can help here too. So once you've built your portfolio, you can analyze your portfolio, check the composition, performance, contribution of certain sectors, bonds or stocks. If you invest in ETFs, you can do, or mutual funds, you can actually do a look through, so you can see the actual investments of that particular fund. But then I don't think that this is something we would like to discuss in more depth. So the message I want to deliver here is this is something we can help you with as well, but we're not talking about this part, but we're talking more about the risk and the optimization. So over to you, Elmar, for the risk and scenario analysis.
Yeah, thanks, Peter. I'm going to switch to the next slide first. My part is risk and scenario analysis now. As you can see, quite a prominent name at the top, it's MSCI Risk Metrics. We partnered with Risk Metrics in that area, and it's quite a good partnership. Looking a bit back in history, Risk Metrics has been there quite a while. It was set up by JP Morgan and Reuters, actually. It was 1996. There's this famous technical document issued, and it's now, in the meantime, part of MSCI, like VaR. Peter is going to talk about the optimizer in a few minutes, which is from VaR. But here I'm focusing more in the risk management topic. Risk management had been in our system in the past via Condor, for those who remember, which was sold in the meantime, but now it came back via MSCI. It's, as mentioned, it's a kind of industry standard in risk management, a very transparent methodology. If we look at the coverage, we cover most of the asset classes which might be in focus, from cash equities, various types of bonds, funds, ETFs, derivatives. So the universe is quite big, which is covered by this. Of course, there are many use cases today for risk management, for risk analysis. You want to know about risk contribution. What happens if I sell a position to my portfolio, for instance, or what's the worst case, the expected shortfall. These are numbers you usually calculate with such a system. So we have multiple, and third point, VaR calculation. The normal VaR, I'm going to not give you a course in VaR calculation. I will explain some of the numbers afterwards in the next slides, but I'm going to talk about this. An essential part in our proposition are historical scenarios and stress tests. Stress tests come into the game by regulation as well. So you have a number of ways to simulate historical scenarios. Historical scenarios are characterized by defined start and ending point. Let's take 9/11. It started, maybe the focus window will be the 10th of September and goes for the next 7 days, where the prices have been moving extremely. And if you do a historical scenario analysis, you apply those risk factors to your current portfolio. A stress test, in contrary, is not a scenario, but very similar to a scenario. You can define whatever you like in terms of that the MSCI world goes up or goes down 10 percentage point, that oil goes up or goes down. This is just a more punctual consideration of a potential situation. So there are various methodologies included. Parametric, you have a theoretical distribution. You assume the prices are normally distributed, log normally distributed, the returns are normally distributed. The advantage of a parametric approach is that it's quite easy to deploy or to apply. Then there is the historical method, where you do simulation of the actual historical prices and risk factors, and you apply them to a current portfolio. The third one, Monte Carlo, you normally use when there are more complex non-linear instruments in your portfolio. This is the big advantage of Monte Carlo simulation. Monte Carlo simulation also uses log normally distributed price series, but you can implement those path dependencies you might need for a more complex portfolio. Last point, as you can see, you can generate a number of customized reports, a number of standard templates as well, and it's quite seamlessly integrated into ICON. I'm switching to the next screen. I hope you can see the numbers. It's a bit small, but you get. I think you should get the major point. You can define on the left-hand side, the upper left box. You can define your universe. It's quite. Or your classifications, actually. You have your portfolio, and you can apply various classifications according to what you need. To industry classification, sector classification. It makes it easy for you to analyze your portfolios. You have some at this standard template, some VaR numbers. You have the present value in the first column. Then you have the VaR. Then there is the shortfall, the conditional VaR, and also the incremental VaR, which gives you information about how much risk is one single position contributing to your portfolio in terms of risk. Then there are some nice graphical windows at the bottom. I'll switch to the next screen. Another standard view would be the on a scale, there is the portfolio return, and then there's the incremental VaR. So you have really a nice visualization of which position might. I've seen that the presentation is not moving. So I hope everybody can see this one. Yeah, there is on the y-axis there is the portfolio return and the incremental VaR on the x-axis. So you can really nicely visualize the impact of the VaR numbers to portfolio. Next slide will be the standard historical scenarios. So what you can see here is quite unspectacular display. It's just a matrix of various different scenarios. You have the present value here in the first column. Then you have the Black Monday, for instance. You have the Gulf War. You have the Mexican crisis. The Asian crisis. So there are a number of predefined scenarios which work by pointing and clicking. So there's nothing much to set up here. The same can be represented in a more graphical way. The impact on your portfolio, applying certain scenarios. You have a breakdown on the bottom here. I'm gonna switch to the next slide, which is the stress tests. Also here, as mentioned before, add a few percentage points to a major index, to oil, to gold, to any other predefined parameters. We're going to have a look at that afterwards, but these are the standard templates. That's interesting. Peter's telling me that we are on slide 36. I'm not sure what you can see now, but I see the standard templates for predictive stress tests now. When we go over to the customized view, I hope you can see the slide now. There is the possibility to set up an individual grid for your portfolio. You have again your present value here, and then you can define your valued risk numbers you're interested in. For instance, we have the present value here. We have the value at risk here, and then we have the new portfolio value in case that the worst or that this happens, that we will have a loss defined in the value at risk. Then there is the value at risk in percentage terms, the incremental VaR, so how much a specific position adds in risk. Then there's the marginal VaR, which gives you the impact when you sell a position. And in the end, there's the shortfall or the conditional VaR, which gives you the whole loss potential. The whole, so if you go far left in your distribution, that's the amount of what you can use in the worst case scenario. Having this in the customization view, so you can select the parameters here or the VaR numbers. You can select the measure and then define, for instance, I want to look ahead 1 day in the 95% or 99% interval. So 95% means that 1 of 20 days I'm going to have a value at risk of X. And of course, you can define what I mentioned at the beginning, the methodology you're going to apply, if it's going to be parametric, if it's going to be historic or Monte Carlo. Again, some customized stress tests. For instance, you can check how much a gold decline of 10% would have, which impact it would have on your portfolio. Again, some scenarios you can create. There's also the possibility to combine scenarios, like the gold goes up or goes down, rates move in a certain way, other commodities move, the whole market, like the MSCI World, goes down for X%. So these are a number of possibilities you can use to simulate expected events, let's call that. There are, you can customize the historical scenarios as well. Yeah, but last but not least, everything can be exported to Excel. It's non-dynamically, it's just a screen capture from all the screens you set up, but sometimes you just need the numbers to continue calculating with them. So this was my last slide, referring to value at risk. With this, I hand over to Peter again.
Yeah, thanks very much. It was very thorough. Conscious of time, I'm going to talk quickly about the portfolio optimization. Elmar already mentioned that we've come into cooperation with MSCI for this part. What I'm going to talk about very quickly is another part of MSCI suite we started using and offering to our clients, and that part is called the MSCI VaR Optimizer. I guess some of you might already know it, but basically this is a new tool which have been fairly freshly added to our portfolio. But to talk very briefly about actually what is the optimization and why should we or should you optimize? The market drivers are obvious. Investors demanding more transparency and more systematic approach. And there is, your risk management guides have been on your shoulder. So, what if scenarios, which already have been presented by Elmar. There is always, there has been a recent refocusing on the index tracking because, the move from the active to passive investing, and the constraints are already mentioned during the idea generation. So this is why the market is actually using the optimization. As I already said, it's a fresh addition. It's an industry-leading optimization tool. They've been on the market for 30+ years. all of this has been implemented into our system. So as I already said, conscious of time, I know that both of my colleagues have a few slides to say. I would rather just say very quickly, if you need any asset allocation issues to have sorted in terms of the optimization, if you want to look into the index tracking, or if you want to do some kind of long-short hedging, we're here to help you. I'm more than happy to take this offline, maybe after the presentation or during the Q&A. Please ask, and we'll reach out to you to actually discuss this in more depth. Saying that, let's go to the portfolio backtesting part, which is again presented by Elmar.
Thanks, Peter. Coming back to portfolio backtesting, you can see that at the headline, backtesting simplified, with the help of integrated data management. Backtesting is, people often ask, what's your possibilities in Icon to do backtesting? We didn't have that for quite some time, and now we have added this new feature. It used to be a separate product, QA Point, but I don't want to confuse you with names. It's just part of Icon, which comes from the quant space. And when you're testing, there are a number of issues in data management you need to consider. For those who are in quant or deal with quant topics, know what I'm talking about. Getting data in line, normalizing data, managing data is quite a complex issue, because when you do backtesting, you need to have clean data series. You need to have consistent data series. And this is a fairly complex issue. There are many quants dealing with this topic, getting data in line. And our backtesting tool takes all the efforts of integrating and normalizing data. Coming back to some problems, which might arise with, come up with data, are things like survivorship bias. Peter mentioned this screener before. You can do a screening of the market, but this is a snapshot of the market you see today. But if you want to do a screen 10 years ago or a few years ago, then the screening with the same parameters would look like very differently as companies merge, companies get acquired, companies go bankrupt, and on. Data is dynamic, it changes over time. Also, there is something called survivorship bias. When companies release data, they do some preliminary statements, then they do final statements, then they do preliminary restatements and final restatements. So if you build up factor models, you exactly need to know what data you take from where. And this is what this tool, this backtesting tool has implemented. So there is, coming to the second point, no programming skills required. You can do a lot of visualizations and exploring of data to construct dynamic universes, and you can create factor models. Factor models can be very different. You can have value models, going for earnings per share, dividend yields, whatever, cash flow, growth approaches. Also, you might want to implement technical factors or sentiment factors. All this is possible with this tool. At the end, when you do your backtest, you want to see how your model is rebalanced. you want to see all the statistics. I'm going to show this in the next few screenshots. By the way, there's also a possibility to collaborate and share the models and export the data. But quickly go to the next slide. The key message here is you can do all what I just talked about in a few clicks. You define your universe in a screener. You set up your factor model or your multi-factor model. And then you do the backtesting. I'm going to have a slide for each of those 3 steps. So you start with, by the way, sorry, this is still in the orange-gray colors, the old Thomson Reuters colors. The new product is already rebranded. Just a side note. So you are gonna do a screening of the universe. You screen for countries or regions, indices, exchanges, security types, whatever. You also could take over a screen Peter previously showed. So this is really up to you how you set up your universe. You can apply filters, market cap, for instance. You want to just take the biggest companies or just the most profitable companies. Whatever you might find useful, you can set as a filter. So having defined a universe, you set up your factor models, which you can see here on the upper part. This here consists out of 2 factors. I think I'm not sure. I cannot see this. So, yeah, it's it consists of the analyst revisions model and the earnings quality model. Peter mentioned that these are very successful models which are used by many quant investors, many hedge funds in automated trading. So these models have a history of good performance. So it might be a first approach to use these factors, but you can use any other factors as well, because we have so many good data, starting with IBES data, our premium estimates for various multiples, for various areas of the company. So then there are also fundamental ratios. There are ESG. There's ESG data you can build into a factor model, and you can program your own as well. So there are a lot of possibilities to define or set up your factor model. So this was the second step. It's mainly point and click, yeah. And the third and most important one is the results page. Here on the left-hand side, you can see you have some settings here. You can set up for your backtest, how often you want to rebalance your model and some other factors. But here you can see the results. You have these percentiles. You have the top and the bottom. The top is green, bottom is red. And the viable strategy might be a long-short strategy, which is outlined here, where you go long the top percentile and short the bottom percentile, and this will be the overall performance. But more important is something called the information coefficient. I'm going to have this on the next slide, but just to finish this, the backtesting results, we have the cumulative returns. Yeah, we have the performance by sectors as well, which is really interesting because it might be that you can optimize the one or the other model by skipping one or the other sector because this doesn't really work for the sectors. It looks that maybe I'm disconnected. Peter, do you hear me?
Yes, I can hear you.
Oh, okay. Okay, you can also see the slide with the backtest.
Yes, I can.
Okay, then I can continue. You can do various reporting, various reporting possibilities, as mentioned, according to sector, and you can refine your backtesting according to your findings in this area. You can change your universe. So there are many different ways to tweak and to get your, let's call it, perfect setup. One interesting number you need to definitely pay attention is the information coefficient. We are of the opinion our data has a very good predictability. So what does the information coefficient do? It goes to the beginning of the period, then the performance is calculated, and then you see how valuable was this number or this parameter in predicting your future values. And this is something which is implemented really nice and easy. So this makes this product a really good point also for people, for portfolio managers who are not interested in the quantitative way of doing business. So this is really quant technology brought to the desk of the portfolio manager. And switching to the next slide, I think I'm finished with my part, with the backtesting part. I'm handing over to Ali, who is going into the data integration with DSS.
Okay, it seems that we lost Ali. Ali, can you hear us? Bear with us for a few seconds. As we already told you, the setup on our side is not ideal, but we're trying hard to satisfy on data needs. So give us a few seconds. My colleague from Vienna will reconnect and will continue.
Yes. I hope you can hear me right now.
Yes,
hello. Perfect.
Yeah, we can hear you.
So this is the beauty of virtual office environment, as we call it. Well, thank you, Elmar. I'm quite sure that it was all impressive, and thank you, my colleagues, for taking over this little gap. So I try now to draw the line for our pricing services. So with these two words, we are now at the last and final part of our webinar. So, and with these two words, we build a kind of umbrella for two very important and nowadays very relevant solutions we offer for you. So as one of our experts said, that nowadays it's for everyone involved in portfolio management, it's more important than ever that you have the three abilities, the ability to assess, monitor, and communicate your portfolio, the ability to test your portfolio, and the ability to optimize your portfolio. So, and also with these solutions we offer you, we try to help you to do your business best as you can. So Let me just briefly step into the data scope select and evaluated pricing service. I will go a little bit into more detail after short introductions. So data scope select is standing for technically speaking, the easy and flexible access to data. So it's not desktop, but it's the data feed. So it's our data extraction platform and the easy and flexible way to access and get data within your systems as well. And the second part, the evaluated pricing service, EPS, again, our acronyms, we love it. It is our professional pricing source. So the team is operating globally, independent, and they offer coverage of over 2.6 million fixed income securities, derivatives, and bank loans. So this is all, again, referring to the fixed income market. As this is, as Peter also mentioned before, this is a market where, well, some instruments are exchange traded, but the vast majority is not. So there you also face some pricing challenges, and this you can solve with the evaluated pricing service from our side. So in combination, these solutions provide a profound and solid source of data. And both you can easily integrate into your own corporate applications. So, but before we go into more detail into this, I just want to show you what data do others look at. So, I mean, this does not look very spectacular, but it shows just the extractions for fixed income instruments pre-COVID-19 and afterwards. So as you can see from the description on the right-hand side, the corporate fixed income instruments is the vast majority which people are looking at or data extracting from. Yeah, so the blue blue part at the bottom of the columns, this is representing the corporate fixed income market and the volume of extractions which are taken. But you can really see that the graph is kind of showing impressive increase of data extraction. So from Friday, March the 6th, we're talking about 7 million extractions. This is on the day itself. So compared to Friday, May the 1st, rising up to near to 9.4 million extractions. So it just shows how important the access to trusted data is at the moment. So, I mean, and this, I think, data is just the beginning. This is something that we can calculate and count on that this will continuously be the case. So, but just move on. Just thought to share, would be nice to share with you some insight. So again, data scope select as a way to access data. Data scope select, as promised before, this is our extraction platform. And what this platform can do for you is, well, it offers you the content. The data is structured into 6 content segments, and this makes it easier for you as well to define what exactly you need to extract depending on your workflow requirements. And each content segment works either as a standalone or even interlinked to other segments as well. So, to give you an impression what the coverage is, well, these 6 beautiful circles full of content and data to meet your requirements, basically. So, as mentioned before, each segment operates with on itself, but you can also link it together. And each segment also operates with various so-called report templates, so that you can extract exactly the field of data that you are really looking for. This graphic gives you also an impression of the rich offering, starting with asset classes coverage to all varieties of corporate action data, for example, capital changes, earning information, mergers and acquisitions, reaching out to terms and conditions like ISIN seller IDs, or instrument classifications as well. So the content is king, but let's move on to a little bit the technical part of it. This is also one of the real strengths of our extraction platform, the technical features. The highlight for anyone looking for a single source of data to integrate in any data application systems in the corporations out there. So if you're working with SAP, if you're working with SimCorp, Finvent, Bellin, you just name it, it comes as a cloud magic word. So it's a cloud solution, so no installation is required. And the data delivery, once it is defined, comes like you wish. The choice of FTP, SFTP protocols, or via an API. It is simply up to you to decide and to make it as easy and automated as possible. So of course, we experience a lot of requests from clients looking for the best data source to integrate into their in-house data application systems. For example, creating a golden copy so that they have kind of build up their own data warehouse in a corporation where various stakeholders within the corporation can also have access to the data. So once you define the source of it, once you extract it and deliver it into your in-house applications, you can work with it. As easy as that. So another strength of the platform is the flexibility. So imagine you run a portfolio, like one of our clients, I mean all of you, actually, so consisting probably of 20,000 instruments. So you create an list consisting of your instrument identifiers, you upload it into this easily accessible platform, and then you decide on which data fields you want to look at. Do you want to have end-of-day data? Do you want to have intraday pricing? What you like to have? Is it twice a day, or is it only on a weekly basis or monthly basis? You need to extract the data. So it's up to you to define it, and we help you, of course, to define the fields. So the data mapping process is at the start. So you tell us what you need to look at, and we, of course, help you to define the report templates, to define the fields, and to best support you in how to get access and how to extract it. So, and once this is set up and implemented in your system, you run an automated process with the fast possible integration into your systems without any manual process. So this is really great strength. And of course, because it's a hosted service and you only pay for the usage, you can also think of optimize your TCO. And you can easily integrate it. And this would be the very technical part of it. So the data scope select extraction platform. And the other second pillar kind of our pricing service offering is our pricing services. And just to give you briefly an insight, we experience, of course, continuous volatility, and the fair value of instruments is now even more important. Another thing is liquidity. So imagine evaluation of instruments where you can only find a trade once a month, but you need to evaluate it on a daily basis. So this is the service you can get also access via the Datascope Select platform. It's very easy to open up a price challenge, and you can directly access. You can have directly access to a price evaluator. You upload your requested instruments where you need the fair evaluation and the fair price of it, and they will do this within a certain amount of time. I think the most extensive time would be 72 hours. But that's really the longest possible way. But you get really the coverage and the pricing results and the evaluated price back in a very, very short time. And you can even get access to the evaluator to discuss it as well. So, and also what's very important, the transparency, of course. You will also receive the price recipes, market color, and all relevant data, which is leading to this evaluation as well. So this kind of in a nutshell, because I'm also a little bit aware of the time. But of course, if you need more insights and information, we are very happy to get in touch with you directly. So just to sum it up briefly. Yeah, and to share with you now kind of the final picture where it all comes together again. So from top down, your use case about portfolio management, fund performers, analytics and insights, to the very bottom of it, our core pillars, the data that we can offer you. We kind of try to serve with all our capabilities and all our delivery options the community you're working in, and to support you in the best way that we can with our vast background and experience in data management, data enrichment, data management, and so on. We really try to help you as best as we can to make you successful in your jobs and to stay in business. So on behalf of my colleagues, I will also again encourage you, please deposit your questions with us and submit it. We are open here for you. Of course, you can get in touch with us after the webinar as well. As mentioned before in the introduction, we will provide you with the slide deck as well. So this is not a problem. There you can also find our email addresses. And we are very, very happy if you also give us a feedback of how you liked the webinar itself and if it was of any use for you, so which we are very positive of. And yeah, on behalf of my colleagues and myself, we wish you a very pleasant afternoon and evening, and would love to stay in touch or get in touch with you. Thank you.